What's up, my people? No skid effects in the building. So, in today's video, I will be teaching you on how to trade boom and crash on Deriv successfully. All right. So, if this is your first time of viewing my content, kindly make sure you subscribe to this channel, share this video to others so that they can also learn from this video, and you'll be helping the YouTube algorithm to recommend this video to more people. All right. So, without wasting much time, let's dive into the main day. So, how do you trade boom and crash? So if you're a beginner or someone who is just coming into the trading system, or you've been hearing of boom and crash, probably you've been trading other instrument, but then you want to actually make a switch to test this amazing pair called boom and crash. The first you need to understand is that boom and crash is a special pair that is offered by only the Deriv broker. So if you don't have a Deriv account, you kindly have to make sure you create your account, because that is the only way you can gain access to actually trade boom and crash. And for you to do that, I've made a link available for you in the description of this video. So kindly make sure you visit the description of the video to actually get your account ready. So once your account is ready, the first thing you need to do is to connect it to your MT5, and every other thing you need is actually available on this channel. So you can always visit this channel to actually learn on anything that you actually want to do. So if you have been trading and you already have a trading account with Deriv, quite all right. So let's dive in. How do you actually trade this pair successfully? So the first thing you need to understand about boom and crash is their individual characteristics. So what is the major characteristic of a boom? One thing you need to know about this boom pair is that they have a a spike to the upside. So anytime you hear the word boom, the first thing should come to your mind is, and there is always a sudden spike that happens to the upward direction. All right. And then when we are talking about crash, crash always have a spike to the downward direction. So if you hear the word crash, the first thing that should come to your mind is that there is always a spike to the downward direction. But right now we are looking at boom 300. That is the name of this particular boom. So there are other boom pair that we have. We have boom 1000 as well. So these are the boom pair that we have. We have boom 300, we have boom 500, we have boom 600, we have boom 900, and boom 1000. Right. Then when it comes to crash, we have crash 300 as well, 500, 600, 900, and 1000. So we'll be working with boom 300 for today's analysis. So the first thing you need to do is to understand these characteristics, that there is always a spike to the upward direction, talking about boom. And the next thing is your knowledge of market structure, which is very, very important. Now, if you want to trade boom and crash, I always advise that you make your trading decision in the alignment of where the spike is going to. You already know that boom always have a spike to the upward direction. So most times, if you're looking out for um buy positions on boom, it is always advantageous to you, right? There are times where the market will also exhibit bearishness in the market, all right? But then if you are able to see that the market is bullish and you are trading boom, that means that you are already having an edge over every other person that don't even know about how to go about this particular pair. So the first thing I'm looking at here is my market structure. Okay, so what is the characteristic of this market? From what we've learned about basic market structure, we say that if a market is bullish, we need to be able to identify the market creating series of what? Higher highs and higher low, higher highs and higher low. And what else? There has to be a continuous break of structure to the upward direction. Now, if you don't understand these terminologies that I'm using, if you're a beginner, that means you need to actually join our Telegram channel, of which the link is also available in the description of this video, because we run weekly classes for free, right? So you'll be able to learn alongside with us, and then you'll be able to grow in your trading journey. Okay, so we now see that since the market is exhibiting a character that we can tend to define it as what, a bullish market, what do you want to do as a trader? You want to trade alongside with the trend. That is why there is a popular saying in trading that the trend is your friend. So what do you want to do? This is the daily time frame. I'm trying to get the overall bias of the market, like where is the direction of this market? Where is the market heading to? The market is obviously trading towards the upward direction, right? So I have to, start looking out for what? Buy position. Now, there is an analysis I did on this page, which I am definitely going to show you before the analysis and what happened after the analysis, so that you can actually see that what I am explaining to you is not just some of those random videos that you can actually come across then to explain theory without practical. Okay, so you see that the market was creating that series of higher highs and higher lows. So I want to go to the 4 hours to actually have a clearer view of what the 4 hour is doing. And what I'm doing is called a top-down analysis, because you need to understand the market from the higher time frame perspective down to lower time frame perspective. And if you want to learn about top-down analysis, you can always visit this page. There are a lot of videos here that you can actually learn so many things from, right? So you can see that there is a video on top-down analysis. So this is the video right here. So you can actually watch this video to learn more about top-down analysis. Now, what I did is, regarding that particular analysis, I already see that since the market is bullish, what do I want to do as a trader? I want to actually start looking at what buys position. So what I did was to come down to 4 hours to actually see what price is doing. Now, there is a law of price action that says what? For every impulsive move, there is a corresponding corrective move. Now, we've already had an impulsive move from this point to this point, right? So what happened? The market needs to make a correction. So I need to check whether this retracement is actually a valid retracement that should enable me to look out for a continuation. And you can see that this retracement is up to 50%. So it's actually a good retracement. And when the market has retraced up to 50%, I know that it is time for me to actually start looking out for a possible reversal, because this is a psychological level. These are Fibonacci tools, right? So if you don't know how to use Fibonacci as well, I've made everything available for you to actually keep you going in this tutorial. So this is tutorial on Fibonacci, right? This is tutorial on Fibonacci. You can always visit this page. This is another tutorial on Fibonacci. So there are a lot of things that you can actually learn in this channel. So I've seen that the market is actually on a very good psychological level on a Fibonacci scale. So what do I want to do? I want to scale down to my execution time frame to actually look out for possible entry. So I'll check the 1 hour time frame, right? I'm refining now. You can see what I am doing. I'm actually refining down to lower time frame. Now, one thing I noticed is I already have a pattern or a system of trading, right? I have a strategy that is working perfectly well for me. So as a trader, you need a working strategy. So if you have a working strategy, kudos to you. But if you don't, like I said, you can always join us in our Telegram channel for free and learn some of these things that I'm saying to you. Then if you're interested in special mentorship, you can always contact us while in the Telegram channel. So you see that I was able to spot out a sweep of this low and a break of structure, right? I had a liquidity around this level, which we call a structural liquidity. Okay, then I already knew that what, since there is a liquidity here, there has to be a sort of an unmitigated order block. Every terminology that I'm using right here, I've created a video to help you understand it. So if you want to know about liquidity, mitigation block, and unmitigated block, you can always go back to the channel and look out for those videos. They are already there for you to watch. Then I was able to spot this unmitigated OB from here. And what is an OB? An order block is the last bullish or bearish candle, depending on the type of order block that you're looking out for, before a massive push to the upward direction, right? So I have this unmitigated OB. Now I have to scale down to what? The 15 minutes. Okay, I have to scale down to 15 minutes for further refinement. And yes, you can see how price actually reacted to that particular. I'll show you right away. So this is just the OB that I'm using. This will now serve as my liquidity after the final refinement that I have. And you can see that the market actually came to this particular point. Do you know the funniest part of this explanation I'm giving right now? This analysis was sent to the um free Telegram group, and this is just the Telegram group. You can see this analysis was sent here. So this is the analysis. Let me show you perfectly well so you can see. This is the analysis on 30 minutes. This is what I was explaining to you guys, and this was the liquidity that I actually marked out. Now you can see that I am not just sending this analysis to them, I'm giving them proper guidance as well, so that those who are beginner will be able to follow up. You see, I told them this is a very volatile pair. If you are a beginner who has no experience in risk management, please do not attend this, except or unless your account size is okay and you can actually determine your risks. This is me trying to ensure that any beginner do not end up losing his or her fund why being in this group, because the aim is to see everybody make money. So this was the analysis. This was the analysis as you as I rightly showed you. And after the analysis played out, this is just it. This was the analysis, right? You can see that the market actually reacted all the way from this zone and straight towards TP. Okay, so this is about how many pips move. And whoever has caught this setup, look at the condition of the market and just see that immediately the market comes to that POI, then the market started buying immediately. So this is one thing you need to know about trading boom and crash. The first thing is to understand their individual characteristic. Second thing is to learn a working strategy, and that is why I have told you that you can always learn from us for free if you want to be in the Telegram channel. Then if you want to become a pro trader, you want to actually advance your skill, you can always contact us for special mentorship. All right, so this is where we'll be stopping today. In our next video, we'll be doing more illustration and I'll be showing you more analysis, a step-by-step guide on how you can actually make money while trading boom and crash. So if you enjoyed this video, please kindly make sure you give us a thumbs up, share this video to others so that you can help the YouTube algorithm to recommend this video to more people. And don't forget to actually register your trading account if you are yet to do that, so that you'll be able to access this special pair called boom and crash. So without further ado, we'll be pausing here and hope to see you in our next video, guys. Peace out and no skid cares.